Well, as we await further details around what exactly the new laws will look like around higher capital gains inclusion, our next guest says that higher rates will reduce the appeal of Canadian equities and reduce long-term Canadian equity returns. To find out more, we've got Ian de Verteuil, Head of Portfolio Strategy at CIBC Capital Markets. Thanks so much for joining us, Ian.
Nice to be here.
So, I mean, you can say that, but you've also sort of crunched the numbers, and you do find over short term and long term a meaningful, I guess, lack of appeal or reduced appeal of Canadian stocks. Walk me through some of that.
Yeah, so absolutely. Higher capital gains taxes are not a positive because at the end of the day, individuals are putting money at risk, and the goal is to get a certain amount of reward. If a greater proportion of the reward when it works goes to the government, it becomes less appealing. But I would say I wanted to highlight in the work we did that it was not simply this capital gains issue. We've seen successive decisions across a variety of industries reduce the appeal of a variety of dividend-paying stocks in Canada. There are three groups of stocks. Banks, energy companies, and telecoms generate 50% of the earnings of the TSX. Yet we've seen successive decisions that have reduced the profitability of these industries over time and reduced the ability of them to pay increasing dividends over a long period of time. And these are largely the investments retired Canadians use to actually fund their retirement. The dividends from these, where they're paying 4, 5, 6, in some cases as high as 8% yield, that's really what Canadian retirees use, because dividends are more tax effective than say, return on bonds. So those things are particularly important. And across each of these industries, there have been decisions that on their own, in pursuit of other goals, have appeal, but they result in less profitability. Let me give you a couple examples here. So for example, in the telecom space, a variety of decisions with respect to spectrum being discounted to individuals other than the incumbents. We understand the appeal of having lower price cell phone pricing, but so far it seems as if many of the individuals that have bought discounted spectrum have simply sold them on later on as we move forward, and it hasn't really benefited us. In fact, there aren't a lot of places in the world where 4 players actually exist in cell phones. In banks, we had the surtax come in and stepped up surtax in 22, and we've had a variety of policy changes that reduce profitability, whether it's with respect to overdraft fees, whatever it is. These things are quite negative. And energy, where do I start? The restrictions with respect to pipelines, restrictions on pipeline. And I totally understand we do need to get our CO2 emissions down. No question about that. But at the end of the day, landlocking Canadian production, all it is doing is allowing other countries to step into the void. And we are doing virtually nothing for CO2 emissions globally.
Well, I was just going to say telecom, banks, and energy, those are politically popular targets as well.
Absolutely. And again, I'm not saying that some of these policies don't have solid ulterior goal. The policies are not, there's other things we're driving towards, other things we're trying to solve. Our view is just that we need to incorporate in those decision-making levels some element of understanding that this is the retirement income of most Canadians.
Well, I want to pick up at that point because, if I looked at the budget, they said the percent of people that are going to be affected is minuscule, just 40,000 people.
And I'm absolutely sure the data is correct in only 1 year. The problem with that number is that it's anyone earning over $250,000. The reality is if you have a cottage, $250,000 with the capital gains, you only sell the cottage once. So my guess is of that 40,000, 10,000 may be repeat, but there's another 30,000 that drop into this on a periodic basis. We don't know the numbers. We don't have access to Revenue Canada. But I would say, broadly speaking, most people don't have over 250,000 capital gains ever in their lifetimes. But particularly the idea that only 40,000 Canadians are affected. We've seen the pushback, whether it's doctors, lawyers, individuals with investment properties, entrepreneurs, individuals with cottages, that type of stuff. Right across the board, I would be surprised if only 40,000 people were going to be impacted over the course of the next 4 or 5 years.
For equity investors, though, you say this dulls the appeal of equity. And by the way, we're not the only ones in the world contemplating higher taxes. Joe Biden in the U.S. floated something similar, taxing unrealized gains, though I don't know what the chances are of that getting through.
I think the odds of that getting through are extremely low, just because it's very, very difficult to police that. What do you do with private equity investments? How do you know how to actually value those things? Stocks go up, go down. You've been talking to a few people today whose stocks may have gone up or gone down in the short term. How do you really run your business in that way? So I don't think that's there. I'm broadly saying, in an environment where Canada has a meaningful challenge with respect to productivity, taxing capital gains, I think, in my opinion, tends to be a relatively short-term approach.
And yet I don't really see a pushback from the other side, which maybe says, the Conservatives, which maybe says, this could be here to stay. Yeah,
it does look as if it's here to stay. I'll leave aside the political shenanigans on splitting the budget into two. I don't understand.
Yes, that's right.
Above my pay grade, clearly. But I would say, at the end of the day, anytime we do these types of things, invariably, they always sound as if they're temporary, and then they never go away.
Ian,